Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Wednesday, and as you can see, I'm reporting from Vegas. Actually, not reporting yet from Vegas. I'm going to be going out there tomorrow, so I have to apologize. I'm going to be less interactive because my flight takes off at 10, but I will have my note out there, and you will have someone doing the morning call. So for today's recap, I'll go over a few things, that's cooking or not cooking or well done. At this point, I tweeted before, and I was just talking to the VTF, that has over 350 plus people. I'm like, you know what? I just don't have much conviction right now in this tape right here. I've had a lot of conviction and a lot of names. Beginning of the year, I come out with 8 picks, and a lot of them have all met their targets and then some. Throughout the course of the year, I come up with some fun statements like, iPhone to head, I think it goes to 100, and then iPad to tush, 115, and that happened in Apple, and recently the Baba to butt call of 120 that hit, and that wound up being a short-term top. Besides, Facebook and all those things that we've been riding and doing, and just staying with. But right here, I'm actually leaving for Vegas in the morning, and I'm trying to think, what should I be in while I'm traveling, and what could I swing trade while I am going to be kind of one foot in the door, one foot out the door in meetings and dinners and presentations and you name it. And I really couldn't find much. There are some high beta names that have just started to resolve to the downside, and I guess you could be short them, which I'll go over. And then you have some things that are still trending, mostly the indices, not a lot of the high beta names. And then you have like the big retailers that are breaking out, and some of the low valuation tech stocks, as well as some of the high quality multinationals with dividends. So. I'm not going to just start throwing things around now. It's been, a trying year, and I was actually at the highs of my year yesterday. Today got a little beat up with that last little move in Baba, and if you're trading it, you know exactly what I'm talking about. Besides, the open, which happened quick. So, I'm just not going to bobble. I'll bobble while I go through the charts. Instead of looking at me, you might as well look at some red and green lines. You look here at the spiders. Looks like a day in the life, right? Here was your V bottom. This is when we took back the 200-day. This is when I think guys out there still ranting said, I don't believe in this rally, stay short, and here we are, fast forward. You had a move above the prior highs that wound up holding and digesting here, and then recently you had another. Oops, sorry, it's kind of getting stuck here on the mouse. Hold on, let me get this. Then you had another. Hold on, the mouse is being a little mousy. Okay, there you go. Then you had another consolidation up here that, damn it, sorry. Okay, that wound up breaking out to the upside. And then today, it felt as if there was a lot of pressure out there, but lo and behold, the 8-day has been holding, and it held again. I will say one thing, though, that is just constant is, I only like to be in swing longs that are above the 8 and the 21-day moving average. That keeps you out of play, or that keeps you out of trouble from weaker stocks. Same way you should only be short names that are under, not even the 8 and 21-day, more like the 50-day. Because if you go back to the spiders, if you would have just stayed away from this short because it was above the 8-day the entire time, you saved yourself a heck of a lot of pain. There were some other things to short, but not this. And here is when it was below it, below the 21-day. Yes, that's when you short it. Here, when it catches up, gets reclaimed, you ride it. So anyway, let's look around at some other things. The Qs wound up being a little weaker, but it held the 8-day also. A little wishy-washy. So again, you don't have to be all in up here, but doesn't mean you're also need to be just short. You have an ascending channel here that I guess you could watch closely, but every time we've seen that, it hasn't broke, but at some point maybe it does. So keep this in mind while I go away. 102.70-ish. You could use actually today's low. Then this morning, I talked about the potential head and shoulders formation in the Russell for a quick short. And I think some guys on the VTF caught it short. If you were prepared, it happened real quick. But then again, it didn't stay below it. This Russell, we don't say buy things for an entire year that, okay, the Russell is going to be up, versus other indices. We trade things and we create cash flow and we use swing trading methods. And there's been a lot of swing trading methods within the IWM as you've had a lot of these, ascending and descending channels. Okay, you had this ascending channel here that wound up breaking to the downside. The descending channel here that broke out to the upside. The ascending channel here that broke to the downside. Yeah. So you could channel surf these things and probably make more both long and short. If you add up all the percentages you probably made on an intraday basis versus just sitting, because that's, again, not what we do. And then you even had this overthrow, to the downside that got reclaimed real quick. So today for active cash flow, I was saying watch to see if you have some kind of weakness in this upper range. Okay, and here was your left shoulder, the head. Right now, remember that little head and shoulder, that little RDR top at 118.08. Well, if you got out there, which was the first time you really could have, or the first real signal after a huge move, you saved yourself this side here. And if you were waiting for a real signal to be short, really it happened somewhere within here below this, and then you had even a little extra push below the neckline, which was 115.50, before hitting a low and bouncing off 114.37, which was also the trend line from over here. So all in all, you could have made some tactical money short here versus some other places. Same way you could have made it tactical to the long side when it had this little RDR there and traded above this and continued and then got a little faulty. But all in all, still hanging in there, but you want to watch and see how this materializes a little further. Lately, the banks have been really a no trade, but at some particular point, perhaps after enough sideways action above the prior high here, it gets going again. I haven't really been that active in the banks for the past week or so, I guess rightly so. Still flagging, within the 8-day, so it still looks okay. The bios, still, has a flag type pattern after showing a lot of relative strength on this V bottom above the 200-day, and then it, broke out to new highs, and then it definitely looked a little wishy-washy in here. But if you didn't sell it perfectly or short it perfectly, you probably didn't make much money, as it's right back to the upper area of this upper range. So, you got to be a little bit careful. So in stockland, I'm really not that excited about much, especially in high beta tech. Apple has met most of my price targets, and at this particular point, after the iPhone to head call here, and then you had your next nice swing trade after this consolidation, right after earnings there. Then we had our bull flag tier 2 trade, thank goodness for that. And now, it's still above the 8-day, but it's a little extended, and to me, I don't know, could continue, but it's just not so, it doesn't, I don't need to be in this while I'm gone. Another few days here, maybe, I would take a little bit, still extended from the 8-day, and it typically does hold that. As far as BABA today, I did buy the options, and in hindsight, you look at it now, and it's like, oh, doesn't this look so easy? Oh, sure. Here was, the BABA to butt call of 120. This is when it, actually confirmed my call, because I wait for the firm to, wait for the stock to confirm my thesis. Tried it here and here, lost a little bit, but then you had to go with it there, and then this is when it cleared the IPO high, and then you had your red drug reversal right there. If you were looking for a short, this was the first time it really gave you a true signal. Okay, and then it broke the 8-day right there, changing the trend. And then today, I started a tiny bit early, wound up catching a nice trade. I don't know why I didn't just wait till closer to 107. And then at the end of the day, it got a little wishy-washy. Overall, still looks really good. It did break this steep trend. So, you have to be a little bit more careful considering where it came from. So maybe if you got short here or you shorted when it broke the 8-day, this was a day to cover. I don't think that it's a day that you have to be all in long. Maybe you put on a feeler. I put on a tier 1 in options, and if you close your eyes for a second and you go back to the 5-minute chart, you come to me first. Actually, while I'm putting this here, a lot of guys that don't actively trade, this probably means nothing to them. But if you go to this chart now, you'll see that I know here a lot of us did a lot of work. Okay, I know for me that this was your 5-minute chart on BABA. Okay, this was your quick move down where they stopped a lot of people out. I got a decent amount of size added right here. Okay, made some good money back and recruit my entire day. And then up here, I'm like, okay, now are we going to get a real red dog reversal? We're going to really trade above this 100.41 and continue. So I said, let me give this time. So giving it time, you would think you had a nice consolidation, a descending channel here, showing commitment to this move, off the lows. So I started to accumulate back a little bit more because, again, I wanted to make sure I caught the follow-through trade because I started a little bit early in here. But so I was like, oh, I just can't make my money back in a little bit. I got to turn this into a really nice trade, and then lo and behold, that happened. So that got me out of a decent chunk of it. I was like, oh, that's horrendous. Okay, one huge bar like that after spending 2.5 hours going sideways. Why couldn't that have been a green bar that way? That would have been nice, and I would have tripled my day, and life would have been great. Said that happened, and then that happened, and that pretty much stopped me out of my stock. And I'm like, oh, I'm not going to wait to the lows. I'm just going to wait. And that took me back to the lows of my P&L actually today. But the funny thing is, right here, I looked at my option account, and I was like, oh, I'm still up a little bit of my options. So I waited for the exact price to put on my options, or at least my first tier. But then over trading it because I was buying right in those hundreds, thinking it's going to go. I can't miss this next move up, and then the opposite happened, take me back to the lows. So you go back to the chart, and you'll see you got a little wishy-washiness into the close, and now you on the daily you have a bit of a doji here. You could trade versus low here, which is 107.22, and it could push down a little bit more depending on what happens overnight. And I think that I'll come up with another call soon about the 120 not being the historic top here. So I want to find the right way in, but by leaving, we'll see. Maybe I'll put some on when I go sit down, or tomorrow morning when I'm going to have my setup from the airport, or I'll just sit in my options and just wait. But that kind of 5-minute bar, it is what it is, and that's why some guys are a little upset about the trading and the algos and the air pockets. Same thing goes with the metals. Okay, I was long the metals on Friday, and I stayed long them. Yesterday I got out of my GLD. It was a really nice trade from 112.75 to 114.75, 2 points in the GLD, and something that I definitely don't have trust in. Was nice. And then I had SLV on also from 15ish, and then was in it today, and then I was like, it went negative, let me get out of it. And then if you look at what happened in the GLDs, okay, it looked just fine. Okay, I was out of it, but just to show you the erratic, random nature of it, look at this. So if you were in it and got stopped out, okay, and said, oh, look at this, I want to short, maybe you could put a quick little short right there. But then down here, if you're like, I think that this is a bear flag, okay, after a big rally, let me add to my short here because look what happened. Or let me, that was it. That was your reflex rally in the GLDs. You had a round trip right all the way back up. So not only did they stop out people out of their longs, they might have got people in short, and then that happened. Then then lo and behold, a bunch of choppy nothing. Okay, SLV did the same thing. Thank goodness on the VTF I got out. I actually got out well. Okay, I was watching it, and I got out right around. Actually, no, not on this side of it. It was nice and tight. I had to stop in without electronic one at 115.50. So I got out on this. So I didn't even really see it happen. I'm like, oh my God, look what happened there. And then it comes, same type of bear flag, and then boom, and it actually pushes it above the prior high, making everyone think, you know what, let's be long it. Just show you how the metals are so rare. So first you had a bear flag down here that people said, okay, that was it, silver's done, it's going lower. They got squeezed. And then after pushing back above the prior high, okay, let me buy a dip here, as long as it holds 1565, it starts flagging a little bit. And then, if you're thinking maybe you get continuation that way, and it goes back down. So you're talking some craziness in some of these, the currencies, the names. It's definitely harder than it's been. There are things to do, and there's money to be made, and there's trends that work. But some of these moves that stop you out of your shorts or get you out of your longs and then happen are definitely a little harder to deal with than we've had in the past. As far as on the weak side, I got to give it to Laz from off the charts. This morning in the morning call, I talked about two tight patterns that didn't decide which way they want to go yet. One of them being Netflix, and in the morning note 2, okay, talked about which way will it go, and this being the downside of it. Okay, so you could have gotten, this was actually a clean trade, a nice short where it didn't poke below and come back above. And if you watched the morning call and said, oh wow, Red Dog said this can go one way or another, because that's what I said, one way or another. I didn't pick up, I didn't pick down, you didn't have to, you just had to wait for that. Okay, and then it traded below and stayed below, and then I think Laz had great timing on it. And then Facebook also, it was like, okay, you're still in this tight range and doesn't necessarily stay tight for so long, and hasn't been below the 100-day in a long time. You could look here. So this broke to the downside. So I guess if you needed something to be in short, you would think the right trade to be short would be Facebook here, would be Netflix into tomorrow, if that's what you're looking to do, for follow through. That's if we get follow through. Twitter broke below also. This little range here, now with a heck of a lot of power. Remember this day, and then didn't have a commitment to it. Now it broke below this, so it's, could continue lower. It's below all the moving averages. So I don't know what people are saying. We rode the nice trend in Twitter until this day. I think that's when I got out of it, and obviously I don't take it into earnings, and I haven't really traded it since. You could have tried it on this day, but then once it gapped up and failed, that was it. I don't think I've touched it since. Same thing with Facebook. Facebook, ran to highs, okay, which was a decent trade, from mid-October. Then I don't take it into earnings either. And then this was after earnings. And then since then, it's been just test, test, test. And, you could still say Facebook has had an unbelievable run. And yes, I've been bullish on Facebook, very bullish. So there's been a lot of room to make a lot of money bullish Facebook, even before this whole, cup and handle pattern. If you Google Scott Redler, Facebook cup and handle, you'll see a cool, video with me and Kramer talking about it before this gap up. And then even if you didn't do it before, this gap up, this pro gap, gave you a really nice move besides, the descending channel that broke that way, or this wedge that broke to the upside. So now it's just breaking here. So if, I don't know what's going to happen here, as far as this trend. But if this trend really gives way after a really big monster move in a high valuation situation, you might want to be a little prudent even if you're in it for the long term. Maybe you just buy some puts just to, have a hedge on, just in case there's follow through to the downside. And as a trade, you would think, now just say if it stays below this and doesn't reclaim it fast, because Facebook's known to fake everyone out, you should at least get this, which is closer to 70. So, I would, that's the way it looks like it should be going. So, I was thinking about taking it short for the next 2 days, but you know what, I'm just going to let that play out. At this point, I don't need to just, put plays on while I'm not here, and, even if it seems like it's the right play, I just would rather, go take care of some business out there, which is a nice place to take care of some business. Could be worse. Anyway, what did oil do today? Oil, didn't really do much. It gave you, this too gave you a pretty crazy trade. It doesn't look like much here, but when it looked like it was going to make lows, it popped back up before selling off. You go to your 5-minute chart to see how erratic it was. Look at this low. Okay, at least this actually made a little bit of sense, because you had your first quick move off the lows, which was like a red dog reversal. You got a flag type move that showed commitment, and you got a secondary move. Okay, so this is what really makes traders money. Okay, is not this fast move that you don't expect, but it's really the continuation or the commitment that you get to see happen to that first move, and then you have to have this type of move to make your money, okay, which shows you a secondary move. Okay, and then from here, I guess some oil guys would have liked to get a third move, because right, it was flagging again right here, so you didn't know whether you'd have red dog reversal right there, quick move. If you missed that, see if there's commitment. There was commitment there, and then you went again. Looked like you could have stayed with some as long as it stayed here, and then once it stopped, you should have been stopped out of at least a tier or so. And then, you look at it here, it still looks good. Now you're like, okay, on the longer time frame, it looks like oil is going to hold up, right? You could have drawn your long sideways consolidation from this, and then lo and behold, big wide range bar again to then just fail. Like, why did this happen for that to happen? That's the computers. That's them stealing, squeezing you out of your stock if you're short, and that's baiting you in so they could sell some and then go lower. So we got to deal with it. There's some things we could approach, or some things we can control, like our own keyboard. But you can't control what else is out there. So if that's the case, only trade liquid names, only trade things that you're comfortable with, only trade things that you have your levels mapped out with a little bit of room, and then continue on. Names that have been working, which are, liquid and filled with, buybacks and whatnot, and you have Coke. There's your second day there. Look at Target was up today. Target had a gap and go. Look at the size of that move. I started talking about Target on the VTF when it broke this downtrend here. Unfortunately, I'm not in it, but that's where I guess a lot of money is hiding. Look at that size of that move. Walmart, on the move still. Look at it, broke above a huge channel here. So people who are in these big retailers, look at that size of that move. Congratulations to you. Costco, also at highs. The RTHs, which I guess makes sense with oil getting hit. Look at the size of this move. Thought people were saying the consumer's dead. Not in RTHs. And this, you had your relative strength because it only spent 2 days below it. Then you had your breakout right here. And what is it doing? It is riding the 8-day moving average. So this is something, if you want it to be long and trim and trail and stay with, you do it. But this is not something you short. No way. It's above the 8-day. It's the strongest thing out there. Short weak things, not the strongest things. And at this point, talking about weak things, you look at the XLE. Interesting. It's not really making lows while the oil has been trying to. I haven't been active here pretty much since this low here. Actually, we've caught a short there, but at this point, it's below all the moving averages, so it's not that interesting. You do have a mid-tier channel here that might give you a trade, but that's all that is. The OAHs, nothing. Just still hanging out down here. I think it's a dangerous short considering what you saw with Halliburton and BHI, even though it fell apart or didn't act so well. But it's below all these moving averages, so it's not really a swing long. But if if you didn't short it here, or if you didn't short it when it broke below the 200-day and didn't recover it and got follow through down here, just if you're shorting it for that extra move lower, you better have a thesis and be comfortable shorting for follow through or downside follow through. And that's really it. I wish I had more conviction. I wish I had 7, 8 stocks on. I wish I was ready to move and groove and let the market make me some money while I have to travel. But at this particular spot where it feels like a lot of stocks are somewhat broken and it's been hard to be short. If anyone shorted the Russell after that big move at 10 o'clock probably got squeezed. Anyone who shorted the spiders after it broke the recent pivot and then added to it and didn't take it, they're not happy. And then you have the divergences in high beta land where you have your haves and have-nots. I will say, real quickly, Google had its first little red dog reversal today. So if you took, that trade, they are going after some, I guess lower beta quality names, and this is, I guess, not as high of a valuation as some of the others. Here's when that wedge broke. It's still below all the moving averages, though. It still has a lot of resistance in front of it, but this could be a small day one. Amazon is still hanging around. Nice little bull flag. I was thinking about taking this, but I just not dealing with it as it's going sideways. You have a trend line here into the 200-day. So if you want something to trade, maybe this 330 is a good trigger, okay, in the next day or so. So Amazon, we talked about it being a potential fourth quarter play in my morning note, and that was when it cleared this 308, and now it's going sideways again. So Amazon's something that you should write down, keep it on the radar while, you might not be hearing too much from me over the next 2 days. So Google and Amazon are actually interesting. Tesla, I didn't have anything on, and thank goodness. And now this stock's been choppy as it is. Granted, there was a decent trade, right here, but all in all, it's been kind of choppy, and there's been a lot of newsletter writers and this and that. A lot of people caught short and trying to wheel it down. But at this point, this little ascending channel broke to the downside. I guess you could trade versus the 21-day, which is right here. That's what it held, where it kind of broke out from. But just wishy-washy. Even G-Pro's been a little tougher to handle. They've given you some decent day trades. The day trade right here was kind of decent, but still, then all of a sudden, the secondary is coming out, and boom, they just, take the rug right out. And I've been hearing that, it's going to be like a retail versus an institutional secondary. So who knows how strong that'll be? But all in all, this bar should have got you out. Sometimes I'll be like, I'm in this, I like this, let's hold it. Sometimes, let's just have some two-way action. And sometimes, days like today where you're like, okay,
Felt like the market was down a lot more and it wasn't. Felt like there are some vulnerable areas that you could be short, and it also feels like it's got to be that specific. So with all that said, if you can make some sense out of it all, hopefully you wrote some things down and it'll give you some, you know, a little bit of a roadmap how to navigate the next 2 days, and then you know, we'll figure it out from there. I will write the morning note both days, so you'll have it if you're part of Redler All Access. I just won't be doing videos, and then I will see you Monday morning at the morning call with Brittany. Have a great night.